Let's speak to Bhavin Shah, founder, CIO, and CEO of Sameeksha Capital, to get his perspective on this. Bhavin, hi, welcome to the show, and season's greetings to you as well. Well, it seems to be, season's greetings definitely for the IT space today. So give us a sense, what's resulting in the up move that we're seeing today? I know Infosys is stock specific with regards to the buyback, but how much of a sentiment boost or fundamental boost is this H1B news which has come through in the past 2 days?
Sure. Yeah. So, in fact, I just spoke about a week back, exactly a week back, when the mood was pretty gloomy on the sector. And, I presented my views on why this is a good opportunity. I think the H1B news, it helps in the sense that it will continue to, from whatever I understood, it will continue to create, the additional talent pool of H1B visa holders in US. Those who go to US for studies, post their studies and practical training, they might be able to get H1B. It looks like, and those who already have H1B, should be able to continue having it. So. It's. I think US has realized that complete block on H1B or with this $100,000, is not really productive. It's productive for the US only, and it will only migrate, ship more jobs abroad. So I think in that sense, it's a positive news. I think I still think that given that companies will not be able to or will have to spend $100,000 to get H1B for for the talent here. I think it will on margin it is going to push more offshoring for sure. That is my view that more and more curbs and making it more expensive to hire software programmers in US. It only helps Indian IT story. So I think that may be a bit of a positive sentiment wise, and overall the stocks have been down a fair bit, and I think that maybe and some of the results haven't really delivered any negative surprises by and large, and so I think with 6%, sometimes more than 6% free cash flow yield that some of these stocks are available, and I'm talking about trailing earnings, not forward. I think it becomes a lucrative entry point for those investors who are not looking for amazing, phenomenal returns, but still respectable returns with very low risk.
Hi, Bhavin. Good afternoon. This is Vinny joining in the conversation as well. So, in terms of returns, right now you said, right, companies so far in terms of earnings, it's not been bad. There's no negative surprise. But would you be looking more at large cap IT or maybe the mid cap IT? And some of these names in the mid and small cap have seen a very good run up, right? Whether you talk about Nugent Software, NetWeb Technologies, all of these small ones are quite chopped up in trade. So how do we look at both large cap and mid cap now?
So I think there are opportunities in both. I've talked about Infosys. Suddenly, very attractively placed in our view. If you are okay with say 10 to 12% return annualized on a compounded basis, I think it's a pretty good place to be. I don't think you can find any other large cap company in the Indian market that is trading at 6%, close to 6% free cash flow yield, and can deliver a high single-digit free cash flow growth for a foreseeable future. So I think that is, I think that's why it becomes, for us a clear opportunity. And then I think also in the small cap, I think last week already I spoke about Mastech. They came out with the results after that, and I think the cash flow generation has been very strong. The revenue growth I think should bounce up a little bit in the coming year. So I think that will also help. So I think, yeah, there are opportunities there. I think NetWeb is more specific to the data server build out kind of a story. And, I think it's a very different zone in that business. I think if you're looking at non-US specific kind of growth opportunities, then, I think we like companies like Reddington, which I think are also seeing some transformation in that business to some higher value added opportunities. And I've been very consistent with growth delivery. So okay. I think there are opportunities in the sector across the board.
Bhavin, you own Infosys.
Yes.
Are you tendering in the buyback?
I think it's an interesting question. I think we will probably tender given the very big delta in the price. And since you asked me this question, my suggestion to Indian companies who are doing this buyback is to not do any buyback. but simply invest excess cash in an index fund and make a very clear-cut policy about that. Because the Indian government has been very unfavorable to companies in terms of returning cash to shareholders, either through dividends or buyback. Both are very unattractive options. And that is not very good for actually the equity markets because it creates lack of an incentive, in fact, reverse incentive for companies to do buyback and hold cash. So I think instead of simply holding cash in tax, in this treasury low yield assets, why not just buy index fund and hold it as long as the tax situation in India remains unfavorable? Maybe someday in some future, some government will wake up and realize this is not right, and they fix it, and then you start giving cash back.
Okay. Just wanted to circle back, Bhavin, with regards to this entire IT discussion. Meta is letting go of its AI employees, a certain section of 600, I think, of their AI employees. What kind of signal is that, giving to the Indian IT companies or investors when it comes to Indian IT, that maybe the AI trade is sort of unwinding a little bit?
I think, first of all, impact of AI in software development field is very strong, very clear. There is significant boost in productivity, and that's one of the reasons why I think more work will get done with fewer people. There is no question about it, and that's why it is a deflationary. I think that is well accepted. I don't think there is any cause for any debate there. However, it also means that software will be written faster. So there will be more interesting problems that will be solved with software. And I think for that, the work will have to be done. And I think the focus for Indian IT company has to be to train their workforce to be able to use these AI tools very effectively, which is where I clearly, and I've noticed with every technology transition, Indian companies tend to play a bit of a quick follower as opposed to leader. Like, for example, Accenture is a leader in this aspect, and Indian companies need to play quick catch up. But I think ultimately the impact of AI on that aspect is that yes, it is reducing work in a short run, but over time it should help also in terms of because of more opportunities that come up. As far as what Meta is trying to do, I think it's a bit of an internal reorganization. As they've hired some new leaders, who see some skills as being relevant and some not being relevant. I don't think it is a big kind of read through on the whole AI race that's going on. And we can debate separately on whether that AI race, where it's going to end up. But yeah.
Absolutely. That's a conversation for another day because it's a vast topic to discuss. But Bhavin, thank you so much for joining us this afternoon, speaking with us in terms of the trends that we're watching out for as well. Thank you so much for that. But on that note, we're going to slip into a very short break. And here's some good news coming in for our viewers. India's business news leader is now a click away. Introducing CNBC TV 18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC TV 18 app now from the Apple Store, Google Play Store, or you can just scan the QR code on your screens.